Everyone, welcome back to Caffeinated Money. Today, we have an exciting and comprehensive topic to discuss, one that has the potential to transform your financial future: the power of compound interest. Compound interest might sound like a mundane concept, but when you truly grasp its incredible ability to turn time into wealth, you'll be amazed at what it can do for your finances. So, sit back, relax, and let's embark on this enlightening journey together. Before we delve into the astounding growth potential of compound interest, let's take a moment to understand what it actually is. Compound interest is the process of earning interest on both the initial principal amount and the accumulated interest from previous periods. In simpler terms, it's interest on interest, and it's the key to exponential growth in your investments. Let's illustrate this with an example. Say you invest $1,000 with an annual interest rate of 5%. After 1 year, you'll have $1,050. Now, for the second year, you'll earn 5% not only on the initial $1,000 but also on the additional $50 you earned in interest during the first year. That means at the end of the second year, you'll have around $1,102.50. The process keeps repeating itself, and that's where the magic lies. Now, let's talk about the real magic in this equation: time. The longer you allow your money to grow through compound interest, the more significant its impact. Let me illustrate this with a few examples to truly grasp the magnitude of its power. Let's compare two hypothetical scenarios: short-term versus long-term investments. In scenario A, you invest $5,000 with an annual interest rate of 6% for just 5 years. By the end of those 5 years, you would have accumulated around $6,535. Not bad at all. But now, in scenario B, you invest the same $5,000 with the same interest rate of 6%, but this time, you let it grow for 30 years. The result? You'll have a staggering $32,078. That's the power of time and compound interest working hand in hand. Another crucial aspect is starting early. Let's compare two individuals, Sarah and John. Sarah starts investing $5,000 annually at the age of 25, while John starts investing the same amount at the age of 35. By the time they both reach 65, Sarah's investments would have grown to a significantly larger sum due to the extra decade of compounding. Starting early gives your money more time to snowball and create wealth. Did you know that an individual who starts investing just $100 a month from the age of 25 and earns an average annual return of 8% would accumulate over $440,000 by the age of 65? On the other hand, someone who starts at the age of 35 would have around $184,000 by age 65. That's a massive difference, all thanks to the power of compound interest and starting early. To understand the speed at which your money can grow with compound interest, we have a simple rule called the Rule of 72. By dividing 72 by the annual interest rate, you can estimate how many years it will take for your investment to double. For instance, with a 6% interest rate, it would take around 12 years for your money to double. This rule is a handy tool for gauging the potential of your investments and planning for the future. Besides starting early, making regular contributions is another way to supercharge your wealth-building journey. Consistent investments, whether it's monthly or annually, can significantly boost your overall returns. This practice ensures that you capitalize on market fluctuations and take advantage of dollar-cost averaging, reducing the impact of short-term market volatility. Let's take an example of two investors: Alex, who invests $1,000 annually starting from age 25 until 35 and then stops, and Emily, who starts investing $1,000 annually at age 35 and continues until age 65. Despite both investing the same amount overall, Alex's portfolio will outperform Emily's due to the longer time period of compounding. While compound interest is a powerful wealth-building tool, it's essential to consider the impact of inflation. Inflation erodes the purchasing power of money over time, meaning that the value of a dollar today will be lower in the future. To combat this, it's crucial to invest in assets that have the potential to outpace inflation and protect your wealth. As powerful as compound interest is, it's essential to be mindful of some common pitfalls. One of them is carrying high-interest debt, such as credit card debt. The interest works against you in this case and can severely hinder your financial progress. Prioritize paying off high-interest debts before focusing on investments. Diversification and risk management are also critical aspects of growing your wealth. Spreading your investments across different assets can help reduce risk and protect your portfolio during market fluctuations. It's crucial to strike the right balance between risk and reward, depending on your financial goals and risk tolerance. If you're unsure about how to start your investment journey, don't hesitate to seek professional guidance from a financial advisor. They can help you create a tailored plan that aligns with your goals and risk tolerance. Their expertise can be invaluable in navigating complex financial landscapes. To further inspire you, let's look at some real-life success stories of individuals who utilized the power of compound interest to amass significant wealth over time. These stories will show you that financial freedom is attainable with patience, discipline, and a long-term perspective. One of the most incredible aspects of compound interest is its potential to create generational wealth. By passing down your knowledge, financial habits, and investments to future generations, you can set them on a path to financial prosperity that will extend far beyond your lifetime. Apart from the monetary benefits, understanding the concept of compound interest can have a profound psychological impact on your financial decisions. You'll be more patient, disciplined, and focused on long-term goals, which can lead to better financial choices overall. The journey to financial freedom and harnessing the power of compound interest requires a growth mindset. Embrace the concept of continuous learning and improvement. Stay open to new investment opportunities and adapt to changing market conditions, allowing you to make the most of your financial journey. In conclusion, the power of compound interest is an incredible force that can turn time into your greatest ally in building wealth. By starting early, making regular contributions, and being patient, you can unlock the true potential of your money. Remember, the journey to financial freedom is a marathon, not a sprint. Stay disciplined, stay focused, and let the power of compound interest work its magic for you. Thank you for joining me on this extensive and enlightening journey. I hope you found value in the insights shared today. Until next time, take care and happy investing. If you found this in-depth discussion helpful, please give it a thumbs up and share it with your friends. And if you haven't already, don't forget to subscribe to our channel for more insightful content like this. As always, we appreciate your support. See you in the next video.